So let's look at some more aspects of credit scores through a question answer session. For example, why is there a difference in the credit score generated by the 4 different credit bureaus in India for the same individual? Now each bureau has its own unique proprietary algorithm which is used to calculate a person's credit score, and the exact breakup of which component comes and what component gets more importance is not known. Therefore, even for the same individual, you will get some variation on the credit score itself. However, having said that, let's not forget that the score is based upon the same data because all the banks and lenders have sent the same data to the bureaus. Therefore, in normal cases, the difference between scores from different bureaus should not be significant. Another question that is often asked is, are credit reports and credit scores generated by all the 4 bureaus equally valid? The answer is yes, they are all equally valid. As you know, these 4 credit bureaus that we have in India, CIBIL, TransUnion, Equifax, Experian and CredXpert are all licensed by the Reserve Bank of India, and they all operate under a common regulatory regime. So the answer is yes, that all the 4 credit bureaus are valid in their reports and in their credit scores. What then is the difference between a commercial rank and a credit score? Some of the bureaus in India do not give a score, as you and I understand it, to commercial borrowers like companies, private limited firms, partnership firms. They give a rank. The rank is where typically it goes from 1 to 10, 1 being the best and 10 being the worst. The concept is still the same. A better rank means lower probability of not paying back on time. A higher rank, say a rank closer to 10 for example, means that the probability of the entity defaulting or being delinquent is higher. A very common question is, what are the major factors that affect a credit score? Now there are 4 primary major factors. There is payment history, there is high credit utilization, there is credit mix, and there is multiple inquiries. Payment history: if you make late payments or you default on your EMIs or dues on your credit card, especially consistently and more recently, then there will be a negative impact on your score. On the flip side, if you pay on time and are never delinquent or don't default, your credit score will improve. High credit utilization is another component. If in your credit card you use the balance amount in your credit card, you swipe it so that the outstanding amount that you have to pay is closer to the limit that you have been sanctioned, then again there will be a negative impact on your score. The third criteria that is used for developing a score is the number of inquiries made on you. If you apply to multiple organizations and all of them make inquiries, then all those inquiries will reflect in your report and will again have a negative impact on your credit score. And the last but more important than many of these is the credit mix. The secured loans such as auto and home loans versus the unsecured loans such as personal loans and credit cards. The more secured loans as a percentage of your total borrowings, the better will be your score. Often I am asked, how do I improve my credit score? There are several ways you can do it, but here are 6 steps which I think will actually help you improve your score. The first, always pay your dues on time. Late payments are viewed negatively by your lenders, and of course they impact your credit score negatively. The second, keep your outstanding balances low. So for example, if you have say a credit limit on your card of say 5 lakh rupees, don't get close to 5 lakhs by swiping the card more frequently to come to that limit. Keep it under control. Maintain a healthy mix of credit. So for example, if you have a home loan or an auto loan and you have 1 or 2 credit cards, that's a healthy mix. But if you have lots of credit cards and no secured loans, that could work negatively for you. Don't apply for new credit randomly. If you're making a loan application and you want to find out what is the best place to go and apply for a loan, There are enough websites available today to help you compare and not wait for you to find out by applying for a loan. Because the moment you apply, the lending institution to whom you've applied will pull a report on you. And the moment that inquiry hits your report, it starts impacting your score negatively. If for any reason you have given a guarantee for a loan, or you've taken a loan jointly with a sibling or a spouse or a child, please monitor those accounts also. Because you might not know, but if that person whose loan you have guaranteed, or that person whom you have jointly taken a loan and who's servicing the loan starts not paying back on time, again your score is impacted negatively. And the fourth is, as you all know, you are now allowed to pull one free report on yourself once a year from each of the 4 bureaus. So review your credit history frequently, monitor your credit score and report regularly so that you don't have unpleasant surprises in the form of a rejected loan application when you actually apply for a loan. Another question that comes up often is, what if I have not taken a loan ever in my life? Will I get a loan? Will I get a score? Now, till recently, if you never had taken any credit, then you wouldn't get a score. However, now the bureaus have offered a new product which is called New to Credit, or NTC. Based on some algorithms that the bureaus have developed, even if you have never taken a loan, you will still get a score. The score typically ranges from 101 to 200, and again gives you an idea that if a new to credit person has applied to you for a loan, then what is the likelihood that the loan will not go delinquent or will go delinquent. Now, this is from a lender's perspective. From a borrower's perspective, if you've never applied for a loan, you don't need to be worried that will you get a loan or not. In all probability, you will get a loan if all your other criteria are met. You have income, you're educated enough to get the job that you get, or you are self-employed, you've got balance sheet, you've got bank statements, and all the other supporting documents that banks and lenders typically look for. So, not having borrowed in the past is not a criteria to worry about getting a loan when you do. Another question that I would ask is, can I get my own credit score? And the answer is yes. When you pull your own report, you can also get your credit score so that there are no surprises waiting for you when you actually apply for a loan. How does a lender use my credit score? I'm sure these are questions which you as a borrower have often wondered or pondered about, especially when you are in the process of taking a loan. The lender builds your credit score policy into the credit lending underwriting policy that it has developed. So a bank will say a score of so much is good, a score of so much is not good, a score of so much requires a differential interest rates, good or bad, and then that's how they use the credit score that they receive from the bureau about you to decide about how much loan to give you, what terms, and whether to give you a loan or not. And therefore, the next question, which is why is a healthy credit score important, is obviously getting answered. A healthy credit score is good for your borrowings, is good when you apply for a loan, and is also useful when a lender reviews their portfolio and decides whether your score has improved or deteriorated from the last time it looked at it, and therefore whether they want to price you differently, either a better rate if your score has improved and a low or a higher rate if your score has deteriorated. So if you check your credit score and report, as you are allowed to now and get a free copy, does your credit score go down? The fact is that it does not go down when you make a self-inquiry. It's actually called a soft inquiry, and when you have pulled your own report or your own score, the fact that there's another inquiry made on you via your own application does not impact your credit score and report. So please do check it as often as maybe once in a quarter or once in 6 months. Do your assets, like your income and your investments, have an impact on your credit score? The short answer is no, they do not, because credit score is determined by the loans and the credits you have taken. your assets, your investment, your income are not loans you have taken and therefore do not impact your credit score. What about a bounce check? Supposing you drew a check and the check bounced, will that lead to a lower credit score? Well, actually there's a double answer to this. The fact that a check has bounced will not be part of your credit report or your credit score. But if you've repaid a loan and your check has bounced for the EMI, then you're delinquent and that will definitely impact your score. But if your rent check has bounced, for example, or some payment you made to a friend for a loan that you took from him at a personal level, if that check bounces, it does not affect your credit report and therefore not your score either. One other question that comes up is some people say, I have never defaulted, I've been paying my loans on time, I have not borrowed again, why has my score dropped? I think the score drops not because you've defaulted or you've not paid your loans on time, but it also can happen if you repay a secured loan and the mix of the secured unsecured loan starts impacting your score. The other reason that could possibly cause the score to drop is that some of the bureaus have reworked their algorithms. So instead of a score of 700 in the new version, an equivalent of 700 might be 650. Now it might be seen as if the score has dropped, but in version 1 of 700 and version 2 of 650 mean the same thing. So the lending institution has to recognize that they've got the score for version 2, so 650 is the new 700. I'd like to end this module by talking about this module and the credit report module. As I've said repeatedly in the earlier module also, the credit report and the credit score are the pillars on which the credit industry, the lending industry uses to decide whether to give you a loan and how much and in what terms. Make sure you as a borrower are maintaining good credit, borrowing only as much as you can service, never being late or delinquent, and checking your score frequently to make sure that there are no surprises in your report or your score. As a lender, going forward, the role that a credit report and credit score will play in your life is only going to take on greater meaning. Analytics, data, artificial intelligence, machine intelligence, all that will combine to make the credit score and the credit report a more significant pillar in your decisioning process. Thank you.